You all loved the previous video where I gave you 8 tips on things I wish I knew before I started trading. So I figured I'd give you 8 more. And just like before, grab some sticky notes, paper, whatever you might have, and make sure you write these tips down. Tape them to the same spot you put the other ones, your monitor, your wall, your desk, or wherever you can. Personally, my desk is covered with these reminders, and I attribute this as a key reason towards my success as a trader. I know it sounds silly, but why don't you just give it a shot and see what happens. Worst case scenario, if this doesn't work for you, you can take them all off. Tip number 1, don't expect the first month that you're profitable to be the turning point in your career. I had at least a dozen profitable months before I truly became profitable trading. And each of those times, I really did think that this was it. That the first time I was profitable, it was going to continue forward. And each time thereafter, I kept thinking the same thing over and over again. Just kept making the same mistake. In order to really know if it's the turning point for you, I would highly recommend you use a trading journal and your P&L chart to be the guidance for you. Personally, I like to use 100 trades as my sample size. If I've made money over the last 100 trades, that's when I know I'm going to be profitable going forwards. So when you have your first month of profitable trading, don't let it get to you. Keep on working, keep on learning, and more importantly, don't increase your account size. Stick with what you have until you have a large enough sample of trades to really validate that you're going to be profitable. Tip number 2, keep it simple. I cannot stress this one enough. I get so many questions and I read so many posts about why am I not using dozens of different indicators in order to tell me when to enter and exit, or which oscillator is best, which one's going to make me the most money. For me personally, I don't use a single indicator in my day trading. Most of these indicators are lagging, which means that they're telling you information after it happens. Imagine if you were driving, you stopped at a stoplight, and you waited for a yellow light in order to tell you to go forward, because that would signify that a green light had just happened. This is basically what you're doing with a lot of these indicators. You're using that yellow light to validate that a green light just happened, but at that point, you're way too late. So just choose something simple and stick with it. For me, my go-to is a simple support and resistance strategy by reading price action on a chart. For you, it can be anything you want. If you really like 1 or 2 indicators, fine, put them on your chart and create a trading plan around them. But don't try to use them all, and don't think you have to use any to be profitable. You absolutely do not, and I would even recommend not using them. Tip number 3, do not FOMO into a trade. Now, if you've never heard this term, FOMO means fear of missing out. And in the way I'm using it, what I basically mean is, don't get mad or jealous when you miss a trade, even if it goes up 3x, 4x, 5x, and you would have made a ton of money from it. Don't worry about the trade you missed, and focus on the next trade so that you're not going to miss that one as well. There are countless opportunities no matter which market you're trading in. Even if you miss your trade entry by a single penny, a single pip, a single sat, whatever it might be in your market, let it go. If you have to, just close the chart completely and move on to the next one. And potentially even more importantly, if something is going on a complete tear, like we saw with Tesla all the way up past $1,000, or more recently IDEX, where this ran from the low dollars all the way up to the $4 in just a couple of days, don't worry about the 100%, 200% you could have gained in hindsight. Stick to your trading plan and look for the next best opportunity. I promise if you try to trade the runners, you're gonna get caught buying the top. And furthermore, you're gonna miss the next runner just because you were distracted by that one. Tip number 4, you cannot buy success with day trading. I've tried all sorts of different paid groups, courses, you name it. None of them were the turning point to me being profitable. Now yes, I did learn some information in some of them, but a lot of that information is free all over the internet. And more importantly, day trading takes time, patience, and persistency. Even if you learn a whole bunch of new information or another strategy that could potentially make you profitable, it's still going to take you time to adapt this. And that's because of one super important reason: psychology. Now, it's really easy to ignore what I'm saying about this, but I promise you it's the most important part of trading, having a psychological mindset. If you think that learning a bunch of strategies is going to make you profitable and you don't learn the psychology behind trading, I promise you, you'll never get there. Learning technical analysis is super easy, especially if you allow it to be. It's really not hard to figure out where to draw support and resistance lines on a chart. The psychology behind trading is the hard part. Sticking to your trading plan, doing the same thing over and over again, using your edge in the market to have you winning over time. If you've watched any of my previous videos, I've recommended it a million times already. but please read Trading in the Zone by Mark Douglas. That book is not sponsored in any way, and I don't make any money by suggesting this to you. I'm simply telling you this because this book was absolutely one of the main reasons I switched to profitability. This book is the best way to master the psychology behind trading, so seriously, get it and read it. I promise you won't regret it. Tip number 5. Don't try to use fundamental analysis and technical analysis together. I'll preach for technical analysis. Fundamental analysis is basically just news. Put it this way, have you ever been the very first person to know about news when it came out? And no, I'm not talking about a Twitter notification that millions of people all get at the same time, even if you think you're really on top of clicking them super fast, staring at your phone, waiting for the exact correct minute. If the answer to that is no, which it should be for almost anyone, stop trying to use fundamental analysis. There are institutions that are paying for this information ahead of time. Literally, they are guaranteed to get information before you. If you're using fundamental analysis, you're just guessing and following the herd. And perhaps even more importantly, with fundamental analysis, entries and exits are completely unknown. You're entering the market at any random moment upon a news event and hoping for another news event that might help you exit. There's no way to craft a trading plan based off of this, and therefore it's extremely unreliable. Tip number 6. Do not start trading with your life savings. Now, in my previous tips video, I recommend that you start with paper trading, and I'm basically reinforcing the same thing here. However, if you don't want a paper trade, here's the next best option for you. Keep your account small until you have a proven record. And what I mean by a proven record is that you have 100 or more trades with a profitable P&L, or profit and loss. If you've made money over the last 100 trades and you haven't changed your strategy at all over that period of time, that's when you can start to move forward. Slowly increase your account size and thus increasing your risk reward. Do not increase the percentage you're risking of your account size. So if you started off with a $1,000 account and you were risking 1% per trade, or $10, stick with that 1% number, even if you increase your account size to $10,000. Simply move over to a $100 risk per trade. I've personally made the mistake of jumping my account size by 3x, 4x, 5x, or even more when I thought I was doing well, especially when I first started trading Forex for the first time. In my first few months of Forex, I was somewhere along the lines of 20 to 30% profitable, and this was back in early 2019. I increased my account size by 5x, and immediately within my first month, I lost all of the profits I had originally gained, plus a bit more. Tip number 7. Control your emotions. It's really easy to look at a winning trade and believe it's going to keep going up forever, especially with those huge green bars. If you've traded at all before, you know exactly what I'm talking about. I've fallen for this countless times. And it's even easier to stare down a losing trade and expect it to turn around soon. You might tell yourself, it can't go down further, it's already gone down 25%. Or, I'll just buy more as it goes lower, and eventually my average price will be low enough. At that point, I'll get out break even. Or, it's down too far at this point, there's no point in selling, I'll just keep holding it until it goes back up because the stocks go up forever. Again, if you've been trading for a while, one of these thoughts probably resonated with you strongly, if not all of them. I've personally said all of these things to myself. And you know what this is? It's acting with your emotions. If you act with your emotions, you'll fail as a trader. Period. Somehow, some way, the market is always out to get you and punish you for your mistakes. If you tell yourself one of these things or anything similar, you're making a mistake and you will be punished. I can promise you that. You need to act like a robot with a set of instructions that you execute no matter what. And this is your trading plan. And finally, tip number 8. Take high quality trades only. If a setup doesn't fully fit your entry plan, don't enter. Even if you haven't traded for the day, the week, the month, whatever time frame it is, still don't enter. You have that trading plan for a reason, and you need to be strict with it. So maybe you're bored, you just want to play around, so you're going to break your rules this one time. Don't enter. If you want to do this, use a separate account with a small amount of money or a paper trading account. What you're doing here is gambling. Yes, you heard that correctly. Trading against your trading plan is simply gambling. If you're going to do this, you might as well flip a coin and enter if it's heads, exit if it's tails. So those are 8 more tips on things I really wish I knew before I started trading. If you haven't already watched the first video in this series, I'll link that in the top right corner. Make sure you do that next. Thank you so much for watching. If you liked this video, please do click that like button win, and consider subscribing for future content. I hope you can take these tips with you, and I'll catch you guys next episode.